I'm extremely excited to welcome you all to week 2, Harnessing Capital and Markets for Good at Unconvention 2022, Making It Possible. As you're aware, Unconvention is one of India's largest convening of the social enterprise ecosystem. And this year we are conducting Unconvention in a little different way to enable accessibility. We have planned sessions for each week based on specific themes. These sessions are designed to open pathways to knowledge, resources, finance, and markets for social entrepreneurs. Not just that, we are also hosting closed-door curated discussions for social entrepreneurs with relevant investors and funders. Some guidelines for attendees today. We'll be adding a feedback form towards the end of the session. Would request all the attendees to fill this out. And as part of the feedback form, there is also an impact survey that Wilgrow is conducting. And I would request you to please fill this out as well. Attendees are specifically requested to add their questions in the Q&A chat window, and these questions will be answered in the last 10 minutes. Our session today is titled, Why Hasn't the Promise of Blended Finance Scaled Up? And on the panel, we have Prachi Jain Vidlas, Director, India, Michael and Susan Dell Foundation, India. MSDF has been a pioneer in implementing blended finance models, specifically in education and financial inclusion sectors. We have Gautam Chakravarti, who is a senior health finance specialist at USAID. USAID is running a large program under Samrit to support financing for healthcare enterprises. Then we have Hari Rajgopal, Vice President, Capital Markets and Strategic Initiatives at Samunati. Samunati has been participating in blended finance solutions with Rabobank and USAID for financing enterprises in sustainable landscape sector. We have a fantastic panel which has their own experience in implementing blended finance instruments across sectors. And our moderator for the session is Srinivas Ramanujam, CEO, Wilgrow Innovations Foundation. As all of you are aware, Wilgrow is an incubator with more than 2 decades of experience. We work only with social enterprises that can create impact at scale. I would now like to hand it over to Srinivas to take things forward. Over to you, Srinivas.
Thank you, Anusha. And a warm welcome to all and good evening. Thank you for making the time to attend this session on a Friday evening. So I promise you this is going to be quite interesting because for us at Wilgrow, this is a subject close to heart, and I have some fantastic folks who have real life experience and who have who probably are going to help me definitely, and also a fair number of us listening in on making this happen, blended finance in India. So today it's actually a sort of a very interesting session because for us the question at Wilgrow has been always, why hasn't it scaled up? How do we move beyond the semantics, the words of blended finance? How do we make this mainstream? Because we are really anxious to see how we can enable access to capital to social entrepreneurs in a far larger way. So, the background to all this, I'm just going to set this up before I'm going to pull my the fabulous panel in, is our stand in social, supporting social enterprise, incubating them, is that they have a sort of a double-edged challenge. On one side, they're working with, something completely unique. They have a lot of innovations, inventions, and they're driving adoption amongst communities which have for a long time being marginalized, underserved. So just the fact that you've got an end beneficiary who you need to convince, or an intermediary in the value chain you need to convince, that itself is one big task. On top of it, you need to start convincing funders that this model, this innovation is actually scalable, is feasible and viable. So today, at Wilgrow, we do a lot of work on the first leg, but the second one we haven't cracked. We are hoping we'll get some ideas here, and that's where we have some fantastic folks. And the reason I mentioned today special is because I'm using this panel to help us build our research brief. Right, Wilgrow is going to be starting some primary research come April on figuring out how we can make blended finance solutions go mainstream. Yeah, so that's sort of giving you the context and telling you why this is super important for us. See, the core at this, we believe, is there is no one solution. And I'm going to depend on my panel to bring out the nuances, also help us understand what we need to consider as we look at the different sectors: education, skills, agriculture, climate action, or health. Yeah, so I'm going to go around in no particular order. I'm going to ask a few questions to sort of lay the landscape out and then build on this. So first up, I'm going to be asking about, uh, you know, quickly about each of the person here, their experience and their solutions. Right? What their solution is, because they've each one has experienced it in different forms, executed it, has seen success. So, what is their solution? How is it unique? And how is it creating impact? Yeah. So if I can start with you, Prachi, and there's some fabulous work MSDF has been doing on your solution, what's unique about it, and how it's creating impact.
Thanks, Srinivas. Yes, I will. I think it's a very important topic that we are discussing today, because despite the efforts made and despite the promise of blended finance, there are very few such efforts which have failed in the system. So it's good to have the discussion on how to take it forward, a very solution-oriented discussion. So when we look at blended finance, I would say we look at the spectrum of concessional debt, guarantees, as well as bonds. All of them fall within, what we call blended finance. And we have used it across all three sectors. We've used it in financial inclusion, we have used it in skilling, and we have used it extensively in education as well. And in each sector, we have aligned it with and have been able to create an instrument which will help us achieve the impact that we want to create for that sector. So for example, in education, our focus is always how to improve learning outcomes of children using, whatever we are doing. So we have done two types of instruments over there. We've done a concessional debt to organizations like ISFC and Vartana, which are school financing companies. Srinivas, I think my voice is still not clear. If you suggest I can continue, or I can try rejoining from my phone.
Yes, why don't we come back to you?
Yeah.
If I can move over to Gautam, and the work on health that you've been spearheading. On the same one, what is your solution? How has it been unique? And how is it creating impact? Somebody Pehel, PMJ, all of that.
Right. So yeah, means rather than talking about a solution, I think in the brief time I would like to cover, if possible, in this brief time, a journey that we actually made. So it's not just one solution; it's a whole bouquet of things, and we had been toying with various things. Traditionally, USAID had been looking at, apart from grant funding, in the market side, basically the traditional loan guarantee, which is partial principal risk guarantee, no first loss and nothing like that, just partial principal risk guarantee, mostly 50% of the principal if it goes bad. Now, what we really found there was that in a matured market like India, because it is 50%, so the 50% risk is still being carried by the investors, especially the banks and all. It really doesn't de-risk that much, and it really doesn't push the banks to those social entrepreneurs which are still risky. So the bank procedures of risk assessment and deciding on an investment still remains. So that really doesn't change much. It basically helps the banks in, say, writing off or maybe putting some capital against the NPA and all. So we started looking at, and the PEHEL project, which is implemented by IPE Global, it actually started in 2015. And there we were trying to look at these social entrepreneurs and see if an addition of technical assistance can really mobilize the impact investment for them. So basically, venture capitalists or impact investors, can they put their money if we as USA don't put a money, but ensure that technical assistance with access to market, maybe some business advisory, linkages, does that really help? It helped somewhat, but we felt that because we are just providing technical assistance, which in a way is more like just talk and systems and not really betting our money along with the investors' money, there are certain limitations to that. The third thing that we tried out was the development impact bond, where we actually looked at kind of, as a USAID, buying the development outcomes, and therefore somebody else invests. Now, we did run a very successful development impact bond in Rajasthan for 3 years. It ended in June last year. And in terms of both impact and financial returns, it did achieve both. So we targeted a 360 small hospitals in Rajasthan for quality accreditation. These small hospitals are either in small towns or the suburbs of big towns. So instead of 360, we actually got 405. So 12% overachievement. And in terms of returns, 8% IRR for the investor, apart from financial incentive for all the implementers who were working with the hospitals. And even for USAID, it was all achieved with a 8% cost saving, in spite of the two successive COVID waves that we had and the lockdowns and the disruption on services. So it actually showed that if we put our money not in the input, but on the output, it gives a lot of leeway for the investor to adjust to all these unforeseen circumstances. COVID was actually unforeseen, but still we could overachieve at good cost. So that was a good learning. But at the end of the day, as we all know, if we go by a typical definition of blended finance, developed impact bond is not really a blended finance, because we do have impact, we do have returns. What we don't have is the leverage, because it's ultimately the donor or the government money that has to completely subsidize with some returns for the investor. So with all these learnings, actually within the Pahel project, this Samrid is not a separate project. Within the Pahel project, we tried out with all this learning to create this, where one, we kept on providing the technical assistance. Two, initially we started with technical assistance for Samrid also, but then later when the second wave hit, we really got USAID grant fund also. So there we were in a way betting our money along with the others who we were trying to attract, and kind of upfronting our investments first as a grant, and then ensuring there is cash flow, and also that has actually paid off. And within we actually started with this renewed grant that we got in April. By now there are already 20 solutions in the field, almost like 10 to 12 times leverage, a commitment of around $300 million for that. So it has started working. What we are getting leverage, we are getting impact in terms of 20 million plus people reached and all. What we are still not sure, it's too early, is what about the returns in the typical blended finance. So these are in short, but basically a journey. Maybe we can come back with some more details.
No, I think there's some very interesting takeaway for me also, and I'm sure the audience, and I'll highlight it later. But before I go to Prachi, Hari, as a recipient of a blended finance solution, could you talk about your solution, what is unique and how it is creating impact? Hari, your voice is muted. And now you're frozen.
Sure. Now can you hear me? Yeah. Okay. So Samunati, of course, has been for the past 7 years providing working capital solutions and financing solutions for asset creation to farmer collectives and agri enterprises. And we have been going about our journey in our pursuit of making markets work for smallholder farmers. But there are certain segments of customers, say the more nascent farmer collectives, entities in the agroforestry value chain, and such related activities that have very high impact but are quite risky to underwrite, even from our, I would say, elevated risk appetite compared to mainstream financial institutions. So I think our journey with various credit guarantee programs has been that they have helped us move faster in areas that we already have a commitment to work on. So for example, today we are working with more than 1,000 farmer collectors, FPOs. But how do we work with nascent FPOs that are created less than 2 years ago? How do we work with FPOs which are in very far-flung areas from a radius of operations perspective? And how do we incentivize our business teams to go and get that business? Because a business guy has hundreds of other things to do. And therefore, how do we bring this on the radar of opportunity for the business teams? How do we indeed fund farmer collectives in specific economic activities that have a different set of risk which are good to do from an impact there is a problem. And of course, last but not the least, how do we get into the farmers, diffuse the kind of technical solutions that help make agriculture not only more efficient, but also less intense in terms of the water and the carbon footprint. And I think these are the kind of end users where our credit guarantee programs, and we have experienced, of course, USAID which launched along with Rabo Foundation, that launched a program for agroforestry. And I'm happy to say that over the last 3.5 years, we have used 87% of the credit guarantee program of allocation of $5 million that was given to Samannati and given to farmer collectives, startups giving solutions to smallholders and a bunch of other customers. Similarly, experience with Rabo Foundation, where we created a loan portfolio of about $240 million rupees or $3.5 million to nascent farmer collectives, loans all which are less than 5 million Indian rupees or 50 lakhs. Similarly, now with USDFC, where there's a program on food sustainability, clean tech, renewable power, we've again have a very encouraging start. On a $55 million program, we are already close to 10% utilization in less than 4 months of the start of this program. So in a way, where there is a commitment to work in this space, but where we feel we need support to move faster, I think credit guarantee programs are very, very useful. And that's the kind of journey that has helped us understand the space better, but also move faster. I think that's in summary, our journey. And we've worked with first loss guarantees, case-to-case guarantees, portfolio guarantees, and pari passu guarantees. We've had very interesting experiences. Of course, the leverage that we are able to get is also something which is differing from program to program, but hasn't stopped us from moving ahead, because we feel some support only reinforces our confidence in what we're doing.
Awesome. I think Hari had a very different perspective, and I picked up something else there too, and I'll come back to it. But Prachi, it's a different segment, right? And might not be so commercial or direct, and the outcomes take longer. But how have you have approached it at the foundation? Prachi, you're muted. Hello. Prachi, do you want to switch off your video? And okay, yeah, there you go. Yeah, now you're not. Now you're unmuted.
Yeah. Sorry, Srinivas, I actually did not fully get your question. Part of your voice broke. So I'll just, I will take off from where I was before I had dropped off, which was that, how can these instruments be used to drive what type of impact and what have we seen in our portfolio? So taking off from what Hari was talking about, we have also found that credit guarantee programs can be a very good use case of blended finance. We had specifically used it at the time of COVID, when suddenly liquidity dried up for very small entrepreneurs, nano entrepreneurs, almost, I would say. And at that time, we were able to get, close to 3x leverage in many of these creative instruments, where we said that, here is a credit guarantee program to enable flow of credit to micro enterprises, and define the micro enterprises to the point that someone in the audience made around what is impact. So businesses which are less than X crore in turnover or less than a certain family income. In education, we have seen a lot of interesting use cases driving home a certain type of educational outcome that we would like to achieve. So we have the outcome that we look for in education is, can learning outcomes of children be improved? Affordable private schools are low budget, low fee budget private schools, where typically for the entrepreneur, there is no incentive, financial incentive as such, to improve learning outcomes. And in this sector, we've done variable rate, interest rate, to say, if you are, here is a debt to you, you can apply it to whichever way you would want to do it. But if the learning outcomes of children improve, we will reduce the interest rate for you. So the interest rate, and it could move dramatically from, say, 13 percentage points to come down to all the way 6 percentage points or even lower. And we found that the market responded very well to this instrument, and more than 1/3 of the children that participate, 1/3 of the schools which participated in this program actually improved learning outcomes. So there was a stimulus, and the response that we found was very, very good, comparable to what we see in a lot of grant-based interventions. Similarly, the response that we've had in the Quality Education Impact Bond, which is the largest impact bond in India, where a group of not-for-profits were given risk capital from UBS Optimus Foundation, were provided a very direct measurement of before after of children's learning outcomes, and if the learning outcomes improved, then for the service providers it was just a grant, but what could happen is that the risk investor could earn an additional interest on top of the grant that they have provided to these organizations. And it was very interesting that we found that all these organizations that were chosen by the risk investors had a track record of performance in education. Their results were well known to them, and that's how the targets were set. But we saw as high as 2x overachievement of targets by these service providers. So it does bring in the innovation. It does bring the focus on the metric around which the structuring has been done, and it does provide the incentive to perform and overperform.
Awesome. I think if I have to summarize what we're talking about, Gautam, you were speaking about how there was more interest. I mean, there was more result when you focused on the output rather than the input, and where there was even a little bit of skin in the game, if I can call it that, which demonstrated that you sort of USAID was anchoring something, or USAID was wanting to bet on the result. After which a lot more money came in. Like, for example, in Rajasthan, and 405 hospitals achieving it with an 8% IRR. So I'm seeing the focus being on focus on the output, right? And maybe that's one. Second, Hari, you were talking about, and even Prachi was talking about looking at how one should approach high risk segments. I mean, it's high risk, but overall it is core to your mission, right? Because it's core to the mission, despite it being high risk, how do you sort of de-risk? How do you increase guarantees? And again, that seems to be another sort of method, which I think, Prachi, you also spoke about with the risk guarantees. The third one, which actually was quite interesting, was there was an investor who was willing to take the risk of impact not happening, right, in education. And that leverage happened because of that. But across, I see one common thread of very strong implementation skills, funding people who you can believe can do this, right? And that actually begs up a new question, which is how much bandwidth did it consume while you were tracking, seeing whether these folks could actually execute? Because it seems to need a sort of a very eagle eye on how folks were performing. Prachi, I want you to answer that first before I go to the others.
Yeah, it needs that, Srinivas. I think it needs it because it's also a new concept in the sector to begin with. So in all the 2 or 3 instruments that I was talking about, there was to begin with a significant overhead of that performance management and performance measurement. So in the development impact bond, just the measurement costs are approximately 10% of the overall instrument. The performance measurement plus the performance management cost stacks up to quite a lot. It's also because there is no public data available in education that one can use for the purpose of measurement. So this is proprietary instruments which are being used for the purpose of measurement as well. So there is that challenge in India right now. There's also the challenge in the space that it's a nascent stage. Even in the case of the concessional debt for school financing companies that I was speaking about, we did 2 loans. We first did it to a company where we did not have any on-the-ground support. And then in the second phase of it, we provided some on-ground support. And the response in terms of the number of schools which continued participation in it and showed improvement, there was a vast difference. So it requires performance measurement and management investment as well.
Okay, that's very interesting. And I think Gautam and Hari, how has been your experience in that?
So I believe, Srinivas, you are basically asking for the bandwidth that goes into finding these implementing partners. Well,
and also making sure they stay on the straight and narrow.
Exactly. Well, actually, from USAID point of view, I personally felt, having managed this impact bond, that 80% of the work is actually before it begins, and post that, if I compare with the other grant funded activities that I manage within USAID, it's very minimal, because the risk is taken by the investor. The investor has to ensure that the program is performing as per needed. They have to ensure that the third party verifier doesn't find any fault and everything happens. So it is basically up to the investor to ensure that they don't lose the money. And therefore, it's more of their concern. And of course, means from our side as an outcome funder, we do go to the field, find if everything is going properly. But we are assured that if things are not good, we don't have to point it out. Investor knows they will not get the money. So in a way, program management from an outcome funder's perspective becomes a lot easier. But when we are structuring it, this was a 3-year impact bond, the Utkrishт impact bond. It took us almost 2 years to structure it.
Wow.
And that is the effort. But I would just like to point out that this particular aspect of having a well-established quality implementer is what is needed for the impact bond. But if we really go for, say, impact investment or a blended finance solution, where we are looking at new innovators, new doesn't have a history, and therefore actually it is betting. But the question is, how do we bet? How do we have a calculated bet? So I think the challenge is more there. For an impact bond, we can actually go to the market, have co-creation, have a skin in the game. Say for 2 years we structure it, but we don't have that leverage for an impact investment or a blended finance investment. We just have to get it running. As I said, within 8 or 9 months, we have 20 investments. So we really don't have that much of bandwidth or time for that. So this is really betting, but then the challenge is, how do we take an educated bet there?
That's I think that's a very interesting perspective. The bet, selection, even how do you identify what could be success? And actually, I'm using that. I'm asking Hari on the same point. If in your case, you're going after folks which in the US market would have been called subprime, right? But now, because there is this guarantee, you're now they become customers. So how are you managing? I mean, how did you see how this on bandwidth?
Sure. Well, I think it's an interesting point. Our entire customer segment, 65% will be subprime, unrated, below double B from a rating perspective. But surprisingly, we can see that 97% of the money comes on time. And then is 3% where there is engagement required, which means business is possible if you do have the right set of underwriting skills. I think a point on program management is also important at the originator's end. And I think, for example, when we establish categories like agroforestry, I think we also, in our journey of the last 42 months with USAID's guarantee, I think we spent the first 12 months understanding the space, defining the spaces of what are relevant realms of opportunity for us, educating the business team, and in fact, setting up an entire climate smart agriculture team internally. The only job of whose was to go on spreading knowledge about the product, about qualifying segments, and instead we set up FAQs, helplines, that an RM, if he sees an opportunity, could have somebody to call to say, hey, does this qualify for climate smart agriculture? Am I getting this right? And the moment you make that investment in people, in knowledge, and then we have a centralized team which holds this knowledge and says, okay, this product qualifies under this bucket. Now we are able to move much faster in terms of the momentum that increases. So I think even as originators, what we think of as an opportunity and a qualifying asset, I think that knowledge which comes from engagement with the guarantee agencies has also helped us define our opportunity sets better. And of course, it requires sustained investment in our people, in our business teams, because they're the ones on the ground going after these opportunities. And therefore, whether they just pass it off and say, hey, this is unbankable, I don't have time, or they say, okay, because there is an impact being created, this is the greenhouse gas. Now RMs come back to me and say, okay, this is a GHG emission reduction activity without any contribution from us. So I think that helps us build more and more momentum in taking these programs forward. But a lot of investment needed from our side as well, and a dedicated team to absorb this bandwidth and manage this bandwidth so that business teams don't have to do this. Because if you just put it in the hands of a business team, it will not take off. And therefore, a dedicated team, project team was required to get this off the ground.
Yeah, so I'm actually hearing the next level of commitment here. It's not just enough to find the capital, but it's also important to put in I think the first, as you talked about, Hari, a team in place in advance of the product, getting the talent in, showing the commitment that you're going to be there, then spending the time, like Gautam, you were talking 2 years before launching a 3-year bond. And then Prachi, making sure that you have at least so much, a bespoke model to measure. I sense all of this means there is a fair amount of institution building going on. Yeah. And I'm wondering, this is actually a question any of you could take. How is it coming together? How can we move it beyond just the knowledge that resides with each of your organizations? Because otherwise, each one is going to reinvent the wheel, go through the same journey. We might never get that scale. Yes, Prachi.
So, I think everything that you just said, Srinivas, is the answer to your topic, that why is this not scaling? Because this is bespoke. Just like Gautam, all the impact bonds that we have done have taken us 1 to 2, I'm embarrassed to say almost 3 years also to launch. So this is a bespoke and very niche instruments getting created. And in order to expedite it, one of the big things which is missing in the market are these intermediary organizations, right? So we do not have the equivalent of an iBanker for doing these. And we've actually used consulting firms to design it for us, which is extremely expensive to be using consulting firms. And that institution, that knowledge in the sector is also not getting built, right? So they're doing it as a consulting project, and then they're looking for another project to do it. So one thing I would say is that we do need these intermediaries if we were to disrupt the space. The second thing I would say is that we do need some standardized metrics across some of these sectors, right? Like we cannot always come out and say that, this funder, for example, Dell Foundation cares about children's learning outcomes in education and is creating an instrument around it, but USAID cares about, say, access, and is just creating a bond around access. So we do not have some set of common metrics, aligned definitions, and an industry almost of people who could measure it in an objective fashion. So that part of metrics and measurement is very weak. And if we move along that path of standardizing it and investing in the capacity to measure it, I think that is that will be one big step forward as well. And I think the 1 and 2 will automatically lead to the third thing, which I'm saying is that, the pipeline is also thin. So if when we look at service providers or organizations which can absorb this type of funding, it's not a very big pipeline that we see in any sector right now. So part of those 1 or 2 years are also going in finding these organizations. In case of a new impact bond that we are structuring, we are actually thinking of giving 1 year runway grant period to actually establish some of those things, filter out some of the organizations. But I strongly feel if 1 and 2 happens, given the amount and extent of interest and capital which is looking to be deployed in this fashion, the pipeline will develop. But that's also a constraint right now.
Awesome. I think this is super. You almost answered my next question, but I will, if Gautam and Hari want to weigh into.
Yeah, maybe I just want to add to. Sorry, you go.
Yeah, please go ahead. Please go ahead.
Okay, so just as a addition to what Prachi said, I think intermediaries do play an important role in making this happen. I think, of course, we as an intermediary in this space brought our network of customers and the last mile distribution capability to, I think, our guarantee agencies that has a role in the utilization that we have done, because we knew these customers in the first place and were only wanting to find more customers. I think also the role of agencies like Unitas, for example, who know this space a little well, institutions like Willgrow that understand these structures. I think a few of us, I think some of us who are here and some of us who are not, I think have these capabilities, and indeed using consulting agencies is not sustainable for a structure. I now see Nishit Desai as a legal firm, some other firms talking about impact law and kind of giving understanding of the impact space and bringing instruments. So there is an interest, but of course, we are far from a templatized set of instruments and rules around this. I think one point, Srini, which you talked about, how do we build scale in this? I think it's also to move from, I would say, and I would say the credit guarantee space, lender specific guarantees to, I would say, originator specific guarantees. Because I think we are moving from a place where I lend and I get guaranteed to I crowd in 4 other financial institutions to participate in the risk of a loan that I originate. And if guarantees can be made available through a person who is willing to crowd in other institutions, I think the leverage of the guarantee also improves. The amount of access of capital that it crowds in also increases manifold. So I think somewhere we have to move from a one-to-one mapping of a guarantor and a guaranteed party to a one-to-many mapping. So I think that's something which is also will help build scale, because when I, as in our capacity as Samunati, when we go talk to banks, when we go talk to other financial institutions, a lot of them have this question: hey, you have all these guarantees, would they be available to me? Maybe I could also then fund. And this is the first time in many years that we are hearing of this, and a willingness to understand this space based on guarantees. And of course, it remains to be seen whether they will be comfortable without a guarantee in the medium term. But at least it's the beginning of crowding in more capital through these structures. So I think that's something which is an interesting mix, which can be taken up.
Thanks, Hari. There's an example, a live thing, because Willgrow is running a pilot today of a similar such guarantee, and I'll talk about one. I know you are part of that too. You lent to that company. I'll come to that, but Gautam, you were going to say.
Yeah, I think most of the points have already been covered, and what Prachi said and what Hari also said, especially in terms of intermediaries and this lenders of lenders and that sort of thing. Actually, what we in USAID are also realizing is we really need to come together to move away from this transactional approach, that basically what Hari was talking about, into a more platform-based approach. So whether it is a platform for structuring, whether it is a platform for investors, platform for recipients, more like a platform-based approach. The problem in platform-based approach would be, but I think we need to solve that, is unlike a typical commercial investment where all the capital budgeting techniques, whether using IRR, NPV, you monetize everything. But in the social sector, sometimes it is difficult and sometimes it's actually not ethical. Like if I want to monetize life saved, whose life do I monetize more? A aged person, a tribal person, a woman. So monetization of social impact is almost not possible, and therefore having a common set of indicators would be pretty difficult. So what we need is actually menu of indicators. But I think once we have a platform-based approach, we can look at these menus and say, for example, we are working for health. So in health, anybody who is interested now, what in specific in health, whether it is saving lives, quality, that can be very specific to a particular investment, but people can pool in their resources. The platform can pool in the structuring thing. So yes, one platform-based approach, and secondly, realizing that in the social sector, we cannot have a common set of output indicators or performance indicators, but it will be nuanced, but more like getting a menu of things and then working on it. On the other hand, I would also like to emphasize that this facilitator role is needed not only from the investment side for structuring and all, but also from the recipient side, because this particular the unconvention, the heading that you have, is why impact investment is or blended finance is not growing. Now, who is growing or who needs to grow? Is it really the blended finance that needs to grow, or those social entrepreneurs who need to grow? Now, if they need to grow from small to large, just funding won't help. They need a business advisory, a very strong business advisory that can help them change from, say, one person-led business into a network of business. And this one person to network, they have to let go a whole lot of things. It's actually intellectually very difficult for them. So I think apart from access to capital, we need to really invest heavily into business advisory and organizational development, organizational change to be parallel to this. Only then it will grow. Otherwise, it's just like you want to engine the power of a car engine, just put more petrol, and that's not going to increase the power of the. You need to change the engine. So just wanted to highlight that it's just not the investor side, but also the recipient side.
No, dear, I think it's all super spot on. I mean, because it echoes some of our experiences. So I'm just talking a little bit about what Wilgrow has seen, and why we ended up calling all of you, having this panel and the research that we do next year is, for one, we had started a small little pilot of a guarantee scheme, but specifically because we worked with so many inventors, and all of them were inventing things for the bottom of the pyramid, absolutely underserved communities, in healthcare and so on. And none of them were able to raise capital. Right? Products are ready. You've jumped through all the hoops in testing, compliances with CDSCO, with all that happened, and it wasn't moving forward. So we said, can we help them in their first business deals? Small little ticket sizes, but if they demonstrate that they can create impact, that demonstration probably will get others in. So the first transaction we did, there was an it was a startup in agriculture, and they were working with small farmers growing, in small 1 acre, 2 acres in Rajasthan and in Uttar Pradesh, mentha, cumin, coriander, and things like this. Yeah. We helped them get a small loan for 25 lakhs. We sort of guaranteed 1/3 of it. Their business, despite lockdown, grew 4x in half the time. And given the track record, actually Samanati came in. And so our partners there is Capspin. The reason we didn't partner with Kamari is because they don't do loans in healthcare. Otherwise, you would have partnered with Hari. But because of this track record, Samanati came in with, I think, 50 lakhs. And then recently, Samanati upped it to 1.5 crores. But this same thing then got ICICI Bank to give them warehouse receipt of 3 crores. So this enterprise has raised zero equity capital, but the business has grown. They're working with more farmers. Now Reliance Foundation is helping them connect to their farmer network. Yeah. And all I can see is I get reminded of that poem which talks about the need of a horseshoe, that equivalent. I just put in 25 lakhs when it happened. And I can see how this sort of intermediary plays a role. And this technical assistance is something I understand because it's sort of close. But yeah, so I hear this, and I'm just wondering, as I also want to make sure we have time for questions. I've noted this, and given these experiences, given this, and the fact that Wilgrow is actually committing money, we are going to be, like Hari, you said, we have a team. We're going to be putting 1 or 2 people to just do the research, scale up this pilot, and demonstrate that we can do something which is not bespoke, and which is not, we can standardize. And even on standardizing, for example, today, we're getting to a place where we're trying to see whether we can prove quantitatively accessibility, affordability, whether time to get a service, for example, is going, is lowering and such. So I have a question for actually 3 of you, and this is going to go to building my research. So it's a very selfish question. Given these experiences, what do you want to see more of from your experience in scaling a blended finance solution? And what do you already talked about challenges. What do you want to see as a challenge structurally questioned? Was that my question clear?
Can you just repeat the second one?
As a challenge, what do you want to structurally question? Yeah. What do you want to see more of? What do you want to challenge structurally?
I can take a stab at it, Srinivas,
Yeah.
On both. So I think what I want to see more of, I want, especially from organizations like Wilgrow, I would like you to play more of a connector role where some of these designs originate from you. Like we as funders, not running around creating designs and then funding them, more of these becoming available in the market as ready-made instruments, which can be brought to us risk investors, whoever you choose to call, who can. So more of the platform approach, I would say, that Gautam is talking about. I'd love to see more of it. Structurally, I'm not sure whether this is the direct question that you were asking, but the FCRA regulations in particular make it difficult for foreign foundations to participate in such instruments, specifically, like impact bond type of instruments, where if I wanted to be a risk investor today, which would mean that I would give a grant initially, but then I should also get the grant back. And, as a foreign foundation, I cannot take it back. And, I don't have the ability again as a foreign foundation to be able to do a platform because I cannot distribute money through a platform, like I cannot sub-grant. So there are some regulatory hurdles as well, which from a structuring perspective are limiting it.
Thank you. Thank you. Apart from that, is there any, I know you talked about bespoke intermediaries, we spoke about that, and metrics. Is there any question you want to challenge on, and Gautam also mentioned it, we can't standardize metrics, or do you want to challenge that at all? Is there can be a common denominator? I know Gautam, you also mentioned that you can't measure it. Do you think, Prachi, do you want to challenge? Do you think that's also an opportunity area?
In some areas you can't, Srini, but I would say in many areas you can standardize. So in education, learning outcomes of children improving can be considered basic, and there can be many more things above it. In skilling, placements, and retention, and salaries, starting salaries can be considered the basic set of metrics which are measured, and then add more above it. But at the same time, I am a little bit in disagreement with the approach that, we participate in common instruments and have our own separate agendas that we are driving. It's always good to have that basic common minimum agenda and then add on top of it.
Got it. Thank you. Gautam, what do you want to see more of? What do you want to challenge structurally?
Well, Prachi already covered that, and I also mentioned earlier that that platform-based approach. And one is the platform-based approach, and also in terms of metrics, I fully agree with Prachi that there can be some basic common minimum. Like if I talk of the health sector, a basic common minimum is access. Now, what happens after access, whose life gets saved, or we increase the DALYs and CALYs, that can be the nuanced thing. But at least the basic minimum is having access, and maybe even getting a premium on access, if it is access for poor, if it is access for tribal, if it is access for Dalit women. So that kind of a premium can also be looked at. But in terms of structure, I think apart from, again, Prachi has already talked about the FCRA and those issues, and we understand that under CSR it's still possible. But if you look at, there are 2-3 things. One is the AIF instrument that we already have. Now, Social Venture Fund, AIF category 1, subcategory 3, I think it is still not practical in a way that CSR laws does not really specify that social venture fund is an investable option for CSR, one. Secondly, if you look at AIF category 2, which is blending debt and equity, we really then need to create, say, another Section 8 company with grants, and then have some arrangement where Section 8 and this AIF category 2 can have some common, say, pipeline and all. So that is one that needs to be resolved. If we can have at least some kind of an AIF where the 3 can be mixed, grant, debt, and equity, with certain parameters and governance platforms and all. One. Secondly, I think we really, at the current point of time, USAID is trying to think of various options. It's just a discussion currently, nothing final, but we are trying to see if grants can be converted into returnable grants. But the question is, legally, how do you consider a returnable grant? Is it debt? Is it a grant where there is just a moral obligation? But then if there is 1 or 2 cycles of return, can we create a credit score out of that if it is just a moral obligation? So these are some of the instruments for which we will need some legalities. And thirdly, I believe we were pretty excited 2 or 3 years back when the social stock exchange was announced. I think we need to give some serious thought to that, where maybe even if it is just philanthropic, can't we issue just philanthropic bonds by the NGOs, purely grant? We are not looking at any investment, any return, nothing like that, but pure philanthropic bonds to be raised as bonds. And if that particular not-profit works better, there can be a premium, just like equity, 10 rupees equity share can be sold for 50 or 60. So if a particular NGO is more creditable, the same face value of the philanthropic bond can then sell at a larger premium. And as a philanthropist, unlike CSR or anybody right now, if you give a check, you are invested for 2 or 3 years. If we have this kind of philanthropic bonds, you can actually exit and have somebody else who has this philanthropic thing come into being. So we need to try out these new platforms, these new instruments, and a legal framework that really clarifies how it can be done. I think that is structurally what I would really love to see.
Thank you. Thank you. What I'm also hearing is that are we truly challenging the boundary conditions on the product design itself? Yeah. Hari, what do you want to see more of?
More low-cost liquidity, I think, especially from philanthropies, because I think while credit guarantees are one way to scale, I think liquidity is also important. And with especially for non-banking financial institutions, which are the maximum users of these programs, funding costs being what they are, there is a delivery challenge in cost of credit to the beneficiary being what it is. But definitely more low-cost liquidity, and I think the Prachi's suggestion on outcome-oriented debt, I think, is wonderful, which can be applied even in the space we are in. Now, next is, I think, more guarantees that are, like Gautam said, platform-oriented, more first-class guarantees that bring more leverage. We would like to definitely have more of that. Why not have a zero coupon bond for a philanthropy? If it is indeed all we are saying is no return, it's a zero coupon bond, and ZCCBs have existed for a long time in the regular financial services space. Why can't we bring that instrument to the impact space? That, hey, just return the money over a long term, say a 5, 7, 10-year zero coupon bond, and then treat it. So I think that's more would like to see of. More standardized metrics. I think yes. I think certain spaces allow for more standardization because there is more measurable impact. Like financial services, I think something easier to standardize than say something like agriculture or as suggestion was made, like education. I think what I would like to challenge is that non-banking finance institutions cannot deliver credit at affordable rates compared to banks. I think that's something I would definitely like to challenge because we are doing it every day. And institutions like us are doing it every day. I think that's something we'd like to be challenged. And therefore, and of course, there is more regulatory acknowledgement of the role of non-banks in delivering impactful finance, but we'd like to see, and we'd like that whole notion, which is there as a kind of a social mode, we'd like that to be challenged.
This is awesome because actually what I'm sensing now is that we have a problem of plenty, but we'll have to bound it. And I'm probably going to come back as I build this brief and ask you individually. I know we have just a few minutes. So, and some of the questions that I've seen or you've already answered. So there is one though. Okay, Gautam, you just answered the one open question too. On this, but okay. So since those questions you answered live, I have a question of my own. Now, given this question about there is thoughts about innovation, the need for a platform, more product design, and intermediaries. Are you willing at all, because each of you represent something very fundamentally different, to come together and sit and say, okay, if someone like a Wilgrow could bring a diverse set of committed folks, passionate folks in this area to the table, then do you think you would be willing to join that to thrash out a common minimum? Literally set down a protocol, if you will, or the base standard. Like, for example, Gin did it with their iris metric. Do you think that that's a need? And maybe then I'm very keen to get that going with folks like you. Do you think that's possible at all?
Well, Srinivas, let me begin. I think this is not only needed, but since last many years, we are trying to do it.
Okay.
Right now, it's not really a platform, but what we are trying is across the sectors, talking to various people, trying to see if within our existing funded projects, we can create such platforms so that that project can be the anchor. Because unlike, say, World Bank or UNICEF, USAID really doesn't work by itself. It works through partners and agencies. So we will need some anchor. But also, on the other hand, and I think that is also just not USAID, but with all the donor partners and other stakeholders in the field, we as a collective are engaged with, say, company, not company law board, but the Ministry for Corporate Affairs to look at what changes are needed, what can be done, providing certain inputs to CSR laws. Also trying to engage, say, Niti Aayog and others to see if certain policy changes that I just talked about can be brought into place. So yes, this is ongoing, but I think what happened, say, 10, 15 years back, when all the donors really came together to say launch a global fund for, say, malaria, TB, and AIDS. Similar movement needs to be there right now with COVID. Also, all donors are coming together, but rather than being, I'm talking of the health sector, disease specific. If we can have a social sector, within the social sector, maybe the verticals on, say, education, agri, health, and a kind of informal, it cannot be a legal structure where everybody loses their identity and it's a new identity created, but more like a coming together, trying to create these platforms, and then having a common understanding on what is the minimum. Like I said, in health, minimum can be access, and then we can work further on that. So similarly for education and all. So yeah, this we are trying to do, but I think as I gave the example for global funds and platforms like that, that got created because of the need, and after a series of interactions that happened, the interaction is going on, and I'm very hopeful that in a, say, a few years time, COVID has really pushed us into that. So in a few years time, we might be coming up with such a platform. It can be a country level platform, it can be a global level platform, but yeah, means platform needs to be created, otherwise we all are just struggling and trying to invent our own wheels, so that is really not efficient.
Yeah, no, I think this is awesome. And selfishly, there's enough material here for me to actually start this work. And I see the potential. Sorry, I just couldn't help it. But yeah, I think there's enough here that is going to, like Hari was saying, there's 9 months of work that I'm going to put in and think and what should be the contours of this program. And the good thing is that if I can get this right, we've also sewn up some little bit of funding from a donor to actually try it out. So whatever we've discussed today is actually, as they would call it in old Reader's Digest, I think drama in real life. So I'm taking all of this and building that brief and starting this work. And I know most of the questions have been answered. If there, as I close, is there any last thoughts the three of you want to leave the audience and me with that which is going to sort of guide the work in blended finance, one, or two, even for a or second is for a social enterprise who's looking for blended finance? One last piece of advice.
So I would say I'll just build on the last thing that Gautam was saying about, a starting set of metrics at least is available because so many such instruments have happened. So as you do this work also, Srini, you should think about social stock exchange, because when they are going to define social enterprises and, all of these things, they would actually need a very similar structure, because it's one thing for a private agency to come up with it, and there is another thing for an institution to host it. And the integration with the several indices which have now gotten formed in India, whether it's the the education index, the ease of doing business, etc., etc. I'm saying are also starting indices for many of the sectors which align very well with how government would define social enterprises and marrying it with social stock exchange. And so that's on metrics. The second thing I would say is that COVID is a great connector as well. And, this is a time when everyone is thinking every single dollar that I spend has to be spent efficiently and outcomes. So, there is a sense of urgency. There is a high need in the market. And some of these innovations go very well with both the need and the urgency.
Thank you. Thank you. Yes, Gautam.
Well, I think most of the things we have already spoken of, but what I would really like to emphasize here is, let's not look at scaling blended finance or another solution. Let's not be driven by solution, but the problem. So what we need to scale up is the social enterprises and scale up the impact, whatever is needed for that. So if blended finance is not good, let's just dump it. But whatever is needed for a social enterprise and to create impact, let's be creative around that. And we talked of all those solutions, whether it is a zero coupon bond or a philanthropic bond, social stock exchange, various platforms. We really need to think out of the box, work with the government and other legal parties to really get it together. But the core has to be the impact and the need of the social enterprise.
Yeah.
And everything around that, and not fixed to any solution or silver bullet that we have.
Yeah, no, makes absolute sense. Yeah. We don't want one more instrument listed in one more and traded. Yeah.
Exactly.
Yes, Hari.
No, I think we are very bullish about the potential of blended finance. We've seen it at work, and we believe there is a whole new bunch of people who are willing to put capital into these facilities, and we see more people who are able to absorb these facilities and deliver impact on the ground. And then we think we'll have to keep on standardizing more and more instruments, so that more and more mainstream players can come into the space to multiply the power of capital. I would say that's my thoughts on this.
Super. No, thank you. I think this was awesome, and I got a lot more than I expected. Thank you. Thanks a lot. And Prachi, thanks a lot, especially for you to staying back one more night there before going home. And Hari, you too. I mean, you could always come back to your hometowns. Thank you for staying back. Thank you, Gautam. And I know we're going to be speaking more because of the program that we're beginning with you in health. And thank you all for listening in. Please write into us if you have any questions, if you want to contribute to the work Wildro is doing in scaling impact, or if you want to speak to any of the folks here, we'll be happy to facilitate that conversation. If you want to join our work as we build this research, feel free to write in and ask for that too. Thank you.
Thank
and
you.
Have a great weekend. Bye-bye.